You're watching episode 31 of the Tax Smart Daily, a daily video series for real estate investors to learn how to get tax smart. I'm Brandon Hall, and before we get started, I invite you to join our Facebook group and our Tax Smart newsletter. Links to both of those are in the description of this video. Additionally, if you have any questions or if anything that I say resonates with you, please drop me a line below in the comment section. I really enjoy engaging with the community and appreciate those that take 10 to 30 seconds out of their day to ask a question. And lastly, click the subscribe button and then click that bell icon. That'll make sure that you don't miss any new videos that we drop. We drop a Tax Smart Daily video. We have podcasts, live Q&As, and webinars. Want to make sure that you don't miss any of those. Today's topic is about suspended passive losses. The big question is whether or not my rental sales can be offset by suspended passive losses from other rental activities. This is coming out of our Facebook group. So I've got property A, B, and C, and collectively over time, those properties have generated a $30,000 suspended passive loss. I go and sell rental C for a $20,000 gain. Can the $30,000 of suspended passive losses from rentals A, B, and C offset the $20,000 gain from selling rental C? And the answer is yes. When you report this on Form 8582, that's where you're going to report the sale of the rental activity. That's also where you're reporting your carry forward losses. So if you're ever wondering, where do I see my suspended passive losses? You pull up your tax returns and you look for Form 8582. You'll be able to see your suspended passive losses that you're carrying forward. But it's also important to know that any passive income from any passive activity, or if I sell my rental properties at a gain, that is also going to flow through Form 8582. So my $20,000 gain from rental C, when I sell rental C, is going to flow through to Form 8582, where it's then going to be offset by the $30,000 of suspended passive losses. After this transaction, I'll have $10,000 of suspended passive losses remaining. And of course, I'm really not diving into the details here with like each individual property and the losses that are allocated to them. That's a whole other can of worms. The simple point to understand is that when you sell a passive activity for a gain, the passive losses from other passive activities can offset that gain. Really important point to understand. We see tax practitioners mess this up in advising their clients, but then when they get to tax time, they realize you can't have that offset. And this is also important for anybody that's investing in real estate syndicates. We often hear that people invest in these syndicates, then they go to their tax advisors, and their tax advisors say, sorry, the passive losses, the passive income from this syndicate can't net out against the rest of the rental portfolio. Look, if it's a passive activity, it can be offset by another passive activity. So really important to understand that all of these different passive activities can net out against each other. And then you could take it even further. Let's say that you invested in a business and you're not materially participating, you're a limited partner, you're not voting. That's a passive business stake for you. So any income coming back is passive income. So you could have a business investment that you make that generates passive income where your rental losses or your rental properties generate passive losses and they can offset each other. So passive activities can offset each other. Passive income from one activity can offset passive losses from another activity. I hope that today's Tax Smart video was helpful. If you have any questions or if anything that I say resonates with you, please drop me a line below. I'd love to help you gain further clarity here, and join us on our social networks. Follow us online. We've got a whole bunch of links in the description to all of that.